Hi there, Serial Trader here. I'll try and do a quick update here on SPX. I'll do something more in depth on the weekend and look at other things, but if we just focus on SPX here. So from that weekend video, I was proposing that we had a bottom, either in place or nearly in place. That proved correct, and I was certainly expecting, a corrective bounce up to a lower high, but obviously we have just ripped and, as of today, gapped up to new all-time highs. So what do you make of that? Well, here's the thing. So on this longer term, being that we're looking back to the March lows here, at least March 4th, on this time frame, I still like that we got 1, 2, 3, 4, and that somehow we got to work this into a fifth wave. Now, I don't have a confident wave count to give here, at least yet, on this proposed fifth wave. So for now, I'm not going to try and sub-label this. I mean, this is just a choppy, overlapping mess, and I can't really fit it into any of the known patterns, at least as of right now. Maybe that will change with some more price action. I'll be able to see something recognizable. But for now, I don't really recognize anything high confidence. So let's just go on to some other things. So we have a gap up. And I would propose that it's probably an exhaustion gap, since we're at the very upper end of a trading range. The highest end you could be, new all-time highs, in what is a very tired, extended-looking market. So I want to just point out a few things here. Let's go to the daily time frame. So when you're trying to work some sort of top, you tend to look for divergences. So here, clearly, just every time we make a new high in SPX, we're making a lower high on RSI on this daily time frame. So that's telling you that you're nearing the end. You're finishing something. You're not beginning something when you have that kind of divergence. So that's one data point on the daily. If we go to the weekly, let me really get out here on the weekly and just remove that for now. We also have a weekly divergence on multiple points, really. So here is where we actually had our highest level of a RSI here, okay, and that was in January of 2018. That was our weekly RSI peak, and ever since, we've been largely making lower highs in RSI and significantly higher highs in price. So that tells you on this time frame we're potentially working something, to the finishing, not the beginning kind of side, right? But even if I go in closer on the weekly, even more recently, we're making... So we got overbought here on our weekly RSI in May, right? Well, we got overbought in April too, but kind of hit our peak overbought condition in May, early May. And despite higher highs in price, again on the weekly time frame, lower highs in RSI. So you got bearish divergence on the daily and the weekly. And on the weekly, you have a small bearish divergence and then also a much larger one going back to 2018. And if we go to the monthly chart, well, we're clearly overbought on the monthly and in a divergent manner. So you got all the ingredients on multiple time frames that we're reaching some sort of inflection point, some sort of important top. But to actually nail it in real time, oh my goodness, that is one of the hardest things you'll ever try and do in this business. And we certainly try, but it's not an easy thing to do. So again, I'll just point out, look at this. So we had our monthly RSI peak, again, January 2018. And despite making significantly higher highs in price, we have made lower highs in RSI. So bearish divergence on the monthly. And we are currently in the overbought condition once again on the monthly, sitting at about 74, but in a bearish divergent manner. So just to point that out. So that's just a few things I want to go through. I'll certainly go into more depth on some other things on the weekend, and not just looking at SPX, because there's other data points that I think can help frame our opinion here of what's going on. Hang on, let me just get those. There you go. Get those labels back. Now going back to our more relevant time frame here. I'm thinking this is kind of the last gasp up. So if this gap, here's what I'd love to see. If we could even gap down tomorrow and create like an island reversal, and that's where you have a gap up and then a gap down and then a clear space in between, a nice island of price, that could be a nice reversal. Or if we just continue a little higher before we do that, or before we reverse, that's certainly possible too. But if I go in, let's try and get a read here. Maybe the 15-minute price chart. Or maybe the 30-minute would look a little better. So if we are trying to work this move off our most recent low there on the 18th of June, if we're trying to work this to finish something, what do we got? I mean, it's tough. Maybe I do need the 15-minute. I mean, let's see here. Just not that clear. I mean, let's just go. How many swings we got? Swing up, correction. So 1, 2, 3, 4, 5. You know what? Maybe I need to go to the futures there to get more price action, because there's definitely some missing action here, obviously, on the cash index. Have a look at this. Clean this up here. Get rid of the volume. EMA. So what time frame? Maybe hourly on the futures. Okay, well, this looks a little bit more palatable. Okay. Well, here's a possible interpretation. I'm not going to lean into it too hard, but potentially you got the 1, and let's see, do we get okay, maybe the 1, the 2, 3, 4, and maybe we're working the 5 here. And within the 5, can we get something out of this? Subdivide the 5 itself. Maybe. Drop that down. So when you're working a top, you want to see if you can get, a sequence that looks like it's nearing completion, nearing maturity. And you could certainly make the argument. Now, in this case, wave 1 would be the longest of the sequence. So wave 3 is shorter than 1. So for this to remain valid, wave 5 would have to remain shorter than wave 3. So let's measure where that would not be the case. Or if it's already not the case, let's see. Okay, well, let's, so right here is where this interpretation would invalidate, and that would be at 42.73 on the futures, which would be higher on SPX. That would be probably closer to 42.80 or so. So as long as we can fail below this level and start really turning down with some sort of impulsive looking decline, we can work this as a potential finishing scenario here. So a 5-wave sequence where you have 1 being the extended wave, and 3 is shorter than 1, and then 5 is shorter than 3. So that's a potential thing to look for tomorrow. If we can actually make a top and then turn down, as long as we do that below this 42.73, this count could be valid. Okay. Well, it does look a little cleaner than just looking at this SPX chart, but the same would apply. So I don't know, maybe we're finishing a little triangle before one last pop up here, and then we finally make our top and turn down tomorrow, possibly tomorrow. Anyway, that's what I'll be watching for. All right, Serial Trader signing off.